Good afternoon and welcome to the Channel Final Bell on the Rural Radio Network. I'm Chad Moyer. On today's program, it's Mike Zuzolo from Global Commodity Analytics. Let's take a quick look at how we settled out. First of all, over on the grains, looks like we're going to be 1 to 3 cents lower on our settlements on corn. July corn 1 3/4 down 447.5, and new crop was down 2 cents. Soybeans did settle in the positive, 3 to 6 higher. July was up 5 3/4, 10.45. November was up 3 cents. Over in the wheat pits, KC wheat 3 to 5 cents lower. New crop July 4 3/4 down at 5.24 3/4. Okay, there were a few things to talk about today, and before we hit on some of the specifics, it kind of felt sort of like a whirlwind again. That there were a lot of headlines, so the trade had a lot to chew on today again, right?
Yeah, and I think that's a good way to characterize it, Chad. I would also add the idea that we continue to see, as we get ready for the WASDE report next week, which is an extra special and important report, since not only do we get new 25, 26 supply-demand numbers, meaning acreage, and we get our first look at yield for the crops, we also will get what impact the tariffs are going to have, in USDA's opinion, based upon their models, for our export side of the equation. And so the USDA report becomes more and more important, I think, as we get closer to Friday's close. And I felt like that was still very much dominant in Thursday's trade. And what I mean by that is the November beans able to stay strong. They had decent export sales, not great, though, in the products. Meal sales were down about 51% from the 4-week average, and actually were below the lowest Newswire trade guess. But the track has been for the trade to buy back beans and sell back corn, and this has been going on essentially since the end of March. And so what we've seen since the 31st of March, essentially in lead month futures, is a corn market that's down over 5% and a soybean market in lead month that's over 6% higher. The justification for buying back soybeans and selling out of the corn, it's really hard to get an idea why that would be by the funds, unless you're just talking strictly planting weather, the fact that it's May. It's clearly not demand, because corn demand has not let up at all. And I think probably the other thing is we've gone back to trading where the corn feels very keenly the price pressure of the wheat market. And I think that those things really stood out on Thursday. The bright news, or the bright side of the equation, was we did see a pretty nice round of profit taking and short covering in the corn, especially pulling the wheat up a little bit. That was very nice to see, especially given the fact that we made some new 2025 lows in July and also in December corn. Now, key point here is the weekly chart, which is still based off May corn, doesn't go off the board until the 14th. No new lows there. We still had a low in the March low at around 426, 426.5.
Talk about exports. Are they holding in there? Does it look like we're still going to end the marketing year strong?
It does. And I think this is where not only did we have 65.4 million bushels of corn export sales, taking us above by far the highest trade guess by the newswires, keeping us almost 50% above the 4-week average. But then we throw on top of that the fact that we got new sales announced at 8 a.m. Central Time. Pakistan bought soybeans for new crop, but in the corn it was a much better look, because we saw Mexico come in for old crop soybeans and new crop soybeans, and then another unknown corn sale when it came to the old crop corn as well. So corn, especially both domestically and internationally, I would suggest has much better price potential to the upside, especially in light of another feature in this market that the trade has kind of tucked away and decided not to deal with as much. And I find it very intriguing, very interesting, because we've got a very serious drought in the state of Nebraska and parts of South Dakota and along the Nebraska-Kansas border and other states that border around Nebraska as well. But the trade has chosen not to look at that right now and not to keep any price premium in the market, even with this amazing demand that we have still in the export and the domestic markets.
Talk about weather. How about world weather? What's going on in the Baltic region or around the Black Sea? Harvest weather, double cropping in South America. Any other weather headlines right now?
Yeah, I would say the weather side of the equation that the funds have chosen to go after and the small traders, small specs have chosen to go after is a benign weather mindset. In fact, today in the news over in Europe, as we made fresh contract lows in Paris wheat, and that's been another similar feature as to what we've dealt with the last year and a half, is the EU wheat is pulling down, and the French wheat specifically right now, pulling down the U.S. prices, and our Gulf of Mexico price around $225 for soft red wheat compared to French cash wheat price at around $220. And so that was specifically talked about today, that the Black Sea, that Ukraine, which is under a significant drought, I would say probably one of the most significant droughts that I've seen in 5 or 6 years for that country, they are expected to get some very much needed relief in the next 3 to 4 days. And so as we conclude kind of the grain look in this first segment, I think two things stand out to me other than the WASDE report, and that is, do we get an Indian trade deal before we go into negotiations, or as we go into negotiations with China this weekend? I would think that would do a lot of good for the markets in terms of the grain markets and the meat markets, commodities as a whole. Secondly, do we still have a substantial weather issue in the Black Sea and the United States and the Chinese wheat belt after we see the USDA numbers towards the end of next week?
Mike Zuzolo, Global Commodity Analytics. Join us. Stay with us for part 2 of the Channel Final Bell. It's coming up here in just a few minutes on the Rural Radio Network.
Competition with innovations fueled by Bayer's R&D, keeping you equipped with an expanded portfolio, elite genetics, and additional local test plots. Channel leads the field, so you can rise above. See how at channel.com/rise. Read and follow pesticide label directions, grain marketing, and other stewardship practices.
Channel Final Bell on the Rural Radio Network. I'm Chad Moyer. Again, Mike Zuzolo from Global Commodity Analytics joining us for our program. Before we talk about livestock, and there are a number of headlines in livestock to hit on, including a milestone for the feeder cattle, but we ended the last segment talking about trade. Now, what do you make of the UK trade deal that was announced? You talked about the hope of India. How does that all set us up for what's going to happen over the weekend in Switzerland with China?
Yeah, this is a huge piece of the puzzle, because I think what we've seen here, Chad, with the weakening dollar, the strengthening gold, the weakening Wall Street price action up until this week, when those things have started to reverse, we've seen this very weak trade scenario keep, I think, potential longs out of the market, even though the dollar going down has been beneficial to keeping shorts out of the market too. But what I'm looking at now is, if the dollar starts to go up because we're seeing the trade deals coming, and we get an actual trade deal from India and the dollar goes up, maybe that causes some short-term pain in terms of the funds and what they want to do just because of the currency markets and unwinding some positions there. But long-term gain could be substantial, and India really is the key if we're going to go into a long-term trade issue with China and trade frictions with China. And that's what I've built into my analysis since the first 100 days of the Trump presidency has now come and gone. I feel like we need to bake into the cake the U.S. and China staying relatively rough with one another in terms of trade until we get to maybe the end of the calendar year. And so I really am counting a lot on India, because India is about the only country out there demand-wise that could satiate the commodity market's fears, especially in the soy complex when it comes to ethanol, sustainable aviation fuel, all kinds of agriculture demand could really compensate us for what we may lose with China the longer this goes on.
All right. Flipping the page over to the livestock side of the markets, settlements for live cattle are going to actually end higher where we were in the middle of the day. Looks like $1.30 to $1.72 higher. Feeder cattle, August contract did settle above the $300 mark. So did September. And so, we're anywhere from $2.50 to just over $3 higher. Let's start on that. The milestone in feeder cattle over $300. What do you make of that?
Yeah, this is a big deal from a standpoint of sustaining these price levels, because if you look at an August feeder cattle chart, and we closed at 301.25 on Thursday's trade, but if you look at a feeder cattle chart in the August contract, we had a run up from a March low to a mid to late March high of about $26, $27. If you add that $26 to $27 onto the April lows, we just hit that swing objective, is what it would be called, technically speaking. And so we've added $26 to $27 onto those very early April lows from back around the 7th, 8th, 9th of April. And so technically speaking, we've fulfilled a move to the upside. This is the critical time period for live cattle and feeder cattle to both see the bull get fed. They have seen the bull get fed here in the later part of the week through the cash market, especially with Texas running very good numbers at around 219. Kansas seeing some purchases at 219, 220. That's getting your average negotiated 5-area weighted direct slaughter steer price up above 222, because the north is so hot and so high compared to the south. These are numbers that do support feeding the bull, as does that box beef price. I think I'm still in the camp, though, that with the April fat cattle off the board and the May feeders getting ready to go off the board here in the not too distant future, it's going to get harder and harder to keep this kind of a cycle moving as we get into the middle, later part of the month. So both in terms of August feeders and August fat cattle, I've hit price targets at this stage to start hedging as we go into the end of this week and first of next week.
What about the price relationship between cattle and hogs? You know, over $100 between live cattle and hog contracts, I believe, even though the July lean hogs ended up over $100 again. Is that something that we should watch, do you think?
Very much so. I think that's an excellent point. You've got a cattle hog spread that's running red hot, and you've got a feeder fat spread that's above $83 now after Thursday. This suggests to me that you need the hog market more and more and more to feed the bull in the cattle. And this is where the pork export sales were very, very good, and that's supportive. If we don't get a trade deal with China, though, I'd be very nervous about the soybeans and the hog markets because that's where the most susceptibility we have on losing export demand is, what I call the pork and bean trade that we oftentimes talk about.
All right. 10 seconds. What are the keys for the rest of the week?
Big key is how we close the week out and whether we get an actual trade deal announced on Friday, but we need it for sure on Saturday, Sunday before that WASDE report.
All right, and that's a key to watch for as we start next week as well. Mike, as always, thanks so much for the thoughts and the insight. Mike Zuzolo, Global Commodity Analytics. You can check him out on his website, globalcomresearch.com. Again, that's globalcom with 2 M's, research.com. Do remember, trading of commodity futures and options does involve a substantial risk of loss. It might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local seed pros. I'm Chad Moyer on the Rural Radio Network.